key highlight of the day is going to be Hyundai Motors IPO. Now, the listing, all eyes are on the listing because the kind of subscription, and of course, let's not forget it's a 28,000 crore IPO, nation's biggest ever in the history of Indian markets, and retail participation that got a very lukewarm response. Rather, QIB that got a high response, and the entire QIB was compensated in the last days, but then only the 50% of the retail was subscribed, the quota which was reserved for retail subscription. QIB was subscribed more than 6 times, close to 7 times actually. Now, what is street penciling in? However, before the listing yesterday only, if you see the grey market premium, that saw a rebound yesterday, just a day before the listing of the issue. But then, if the price band if you have to believe with the price band, if it's listed around 1960, let's understand. Let's get you some screens also. In fact, this is a very interesting data point that our research team has also got up for you. That if it's it gets listed at a market cap of 1.6 lakh crore, if the issue price is it settles at 1960, then EV to EBITDA for FY25 it's trading at 17.5 times. For FY24, PE could be 26 times, and of course forward would be 18.3 times now. Now, if it lists at 10% discount to the issue price, that is nearly 1764. At that time, what would the market cap? It could be 1.4 lakh crore. Whereas on the upper band, if it starts to list at a premium, and that could be a scenario because the kind of rebound we've seen in GMP prices just a day before the issue. If there's a chance of listing at a 10% premium or maybe 20% of premium, the market cap, with a 30% of premium, it could list with a market cap of 1.9 lakh crore. That means simply 22 times of its PE, FY26 PE ratio. Even Hyundai India, of course, a key strength company, no doubt about it. It's the second largest player in the passenger vehicle segment, and of course the kind of high margin the SUV segments that commands for, and the company has a good mix of its higher margin exports. They are set to launch their EV models also. So all the fundamentals are intact, but there was a slow response, a lukewarm response from retail investors on certain concerns, like the valuations were very high, and in fact there's a slowdown in overall slowdown appears to be in the entire festive demand, entire auto segment demand. That's what is also weighing on the in fact the listed players, as well as there could be some sort of lukewarm or maybe some sort of soft response. But then if you look at its valuation comparison over the market cap, even its FY24 EV to EBITDA ratio, if we compare it with its peers like Hyundai, Maruti or M&M, we get to that screen also. In fact, M&M would be 22.6 times, whereas its FY26 EV to EBITDA is 17 times, and Hyundai is bigger than, it's larger than Maruti and even M&M. It's higher than both of its peers also. So the valuation concern, slowdown in festive demand, as well as the overall, the auto space is going through a slump or maybe a slowdown. That appears to be weighing on the response that we got from the retail investors. But let's see how it lists. The GMP has surprised actually.
Well, absolutely. Let's see how the listing goes. But let's also take a look at what the brokerages then had to say, because when you take a look at what Nomura then had to say, they're initiating a buy with a target price of 2,472. They're talking about how the company is riding on style and technology, and premiumization is also a key growth lever that they see when it comes to Hyundai Motor. They're also talking about how there's a long runway for the Indian car industry. So that is also something that they're highlighting, and they also see the company being poised for healthy long-term growth. So that is the view coming in from Nomura. In terms of key catalysts, of course, they do talk about the capacity expansion in the second half of the year. They're also talking about the launch as a key catalyst when it comes to Hyundai. Let's also take a look at what Macquarie then had to say, because they're also initiating an outperform with a target price of 2,235 rupees. And in terms of the PV premiumization, that is something that they're highlighting along with the growth pure play. In terms of a key catalyst, the market share in the core segment has stabilized. That is also the word coming in from Macquarie. And they're also saying how the favorable portfolio mix as well as premium positioning is something that is going to be a key catalyst when it comes to Hyundai, and parent capabilities as well as market share upside risk is also something that Macquarie is highlighting. So that is the word coming in as far as brokerages are concerned.
All right, so Macquarie is clearly saying that it can command higher PE multiple. Let's see how this one lists today. But then let's get...
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. and then break right through them, become something more. It's my time to rise.